last chance. No beating around the bush.
I don't know. I don't remember.
Blake Production.
Alright, yo, what's good, guys? Let's get into this video here. I wanted to go over a few educational videos. It's going to be volume today. Now, why do we pay attention to volume and other technical analysis tools when we're charting? Well, most importantly, we have to understand that as regular traders who are not institutional buyers, you know, like bankers on Wall Street, like algorithm traders, like huge hedge funds, all these examples, right? We are not them, so they're in the know. They have better access to technology, info, and, you know, more insider things that could help them make more money in the markets. So for regular traders like us, it's best for us to use technical analysis, volume candlesticks, your own due diligence to like get an edge in the markets. So I'm going to go over volume today. And volume is important in my opinion because it helps us identify when these entities, hedge funds, institutions, like whatever they are, it tells you when they're buying, right? So clean example here, right? We have a downtrend here in DeFi. It's been going on for weeks, and then we get this big red volume candle. Now, what are these candles telling us? All right, well, simply, these volume nodes at the bottom are basically telling you the amount of shares that were traded that day. This one's red. The red one is telling you there was more selling that day than there was buying. The green ones tell you that there was more buying that day than there was selling. So it's very simple what it's trying to do, right? This white line above here is telling us the 20 period average. So the time frame I'm using is the daily time frame. So this is telling us the 20-day average of volume, right? So now how can we use this to tell us something simple in the markets that'll give us an edge? Well, if you're looking to trade this stock back in March, it's in a downtrend. So that's one reason why it might not be a good buy. But then when you see this big red volume indication here, big red volume node, it's basically telling us there's lower volume to come. It might not come right away, right? Because as you see, we get immediate lower drop, but it bounces in the coming days, right? Overall, it's telling us big institutional selling here may be waited out. And as you see, the downtrend continues until we get a big reversal at the bottom in July. So when that happens, we have a few days, a trend change, and then you could see this, right? Volume increases, big institutional buying. This is telling us there's going to be higher prices to come, right? So when it's always important when you're using volume to reference it to the previous candlesticks and the previous volume situation, right? Always reference the volume, right? So when we're looking back in April here, this trend overall is a downtrend. The volume here is mostly selling, as you could see. The volume is indicating that it's mostly selling. Why? Because there's more red than there is green. So there's more selling. Price is going downward. And then this big candlestick comes up, right? So it's telling us that there could be more selling to come. Now, when we're using volume in reference to previous candlesticks and the trend, this is how we get our edge. You're combining different skills and using them to identify certain things like patterns or trends in the market. As you notice, we get to this bottom here, the candlesticks are identifying a trend change, right? We get this increase in volume and then a massive increase in volume. Plain and easy example. Now, when we look at Galaxy here, as you can see, this big red candlestick, big red volume, it's telling us the prices, and it's at the top of a trend, right? So we have this big doji prince, a huge red bearish engulfing candlestick on huge volume. Pretty sure it's the highest volume of all time as well. That's indicating, listen, there's going to be a period of consolidation coming. And then it happens. Then we have this huge period of accumulation because we create a range, right? It bounces from 18 to about 25 for a few months, right? We're playing in this range. Look at the volume. The volume is dying off in this range as it's accumulating. That's another thing you could note. When things are accumulating, the volume tends to die down. And then we get that big spike in volume again. So what we're doing is we're referencing many different things here. The overall trend of the candlesticks, what the volume patterns are telling us when there's a big spike in bearish or bullish volume, and when there's accumulation potentially happening. So these are good things to know. This is how we could use volume to help us make money. And I hope this video, it's a pretty simple beginner intro into understanding volume, but I hope it helped. So enjoy. Cheers.